Okay. Just going live here. 1 second. Just want to fix something really quick here on my end. 1 second for me. Okay. Team, can you just give me a heads up? Can you hear me okay? I got a little mic issue on my hand. If someone could just leave something in the comments for me, that'd be great. Can someone just confirm with me that you can hear me okay? Okay, thanks. So, hey, Chris, how's it going, man? So I know a lot of people will watch this later on. I just want to cover a couple of things quick. This will not be a long live stream here. So we want to jump right into this. So Amazon is currently plummeting in the after hours. I'm going to get a quick update here on where it is because this is pretty crazy right now for what I can't perceive as being a real serious issue. So I want to talk about what the opportunity might be. So I'm looking at the Amazon price right now at 95.55, down 3.6% on the day, but down 14.2 after hours. So pretty much a total disaster from the stock. I know Kramer's going to be in trouble. Um, so I want to read back exactly what's going on here because I think it's important. So, um, long story short, they reported the third quarter earnings just recently, like it just came out a little bit ago here, and the stock is getting absolutely pummeled. It looks like it hit a bottom, came up, but probably going to fall back down again. So here's the nuts and bolts of what I'm seeing, right? Reported adjusted earnings of 28 cents a share against an expected 22. So they beat there. Revenue of 127.1 billion against a forecast of 127.4. So off by 300 million, but really that's a rounding error for someone like this. Overall revenue did climb 15% from the year over year period. Seems again like pretty decent news. So they've returned to what we're calling double-digit growth after 3 quarters of growth in the single digits, which is again great. A big part of the reason we're seeing this real big drop in price is for the fourth quarter. They're expecting revenue to be somewhere around 144 billion. There's a range. Just if you're new to earnings and understanding it, there'll be a range. So this might be 148 down to 140. 144 is really that midpoint. However, the problem was the original estimates were going to be 155.1. So they're calling for a very big hit overall to their expectation of what earnings will be in the fourth quarter. Now, additionally, the other piece of this, overall web services fell short. So the AWS division, the division that everyone sort of loves about Amazon, it showed sales of 20.5 billion below the 21 billion. But again, seemingly bad news, but still up 28%. Okay. So I think the big question we have to ask ourselves here as investors is, hey, everybody, thanks for jumping on. I just finally got my screen up. I want to tell you a couple of thoughts here. Then I want to tell you what my buddy did actually earlier, who's now literally living like a king, basically. So this is a typical case of not really bad news that's going to come across as being absolutely terrible news here. So as always, right, like this isn't about giving out financial advice on a stock. So let's just hone in on the company. Overall, the numbers came in good. They were slightly off on revenue for the overall company perspective, but still up. AWS was up huge, really, frankly. Yeah, they missed slightly, but overall, they were still up. I think the reality is we're in a macro environment where fundamentals don't matter, and there's a lot of good opportunities to jump into really good players. If you look at just the breakup value of Amazon, if they were to break into Amazon, the retail delivery company, an online e-commerce monster, and you separate out AWS, these are two mega cap companies. Sort of almost a little bit absurd, frankly, to think about the price dropping to this level. I talk a ton on my channel about hedging and about how to leverage puts as a way to protect your positions. So my buddy had given me a heads up that he was basically going to go big into puts. So he bought. He deals in bigger numbers than the average person. So just to give you a scale of it, he bought hundreds of puts at a $90 strike. And he paid 3 cents each for those. So just as an idea, that is now up some, hundreds of percentage points, if not even more at the time that I'm recording this. So this is why it's so important to understand around earnings time, what risk looks like, how we measure risk, and the value of getting into companies that are likely to be affected by the macro. And I think that's exactly what happened here. Yes, they're predicting Q4 could be rough. They're calling for a pretty wide range of almost $8 billion of range, frankly, where they're going to be in the forecast piece. I think it's important here to step back and realize that I work next to windows all day. Okay. The one consistent thing I can tell you every day of my life is there are Amazon trucks going back and forth. People are not going to stop spending money on, online. Okay. I mean, it's almost laughable when you see these prices. Um, but I think it's also pretty predictable. If everyone is going down, we have to sort of start to expect this to be the case. I think we've got some good surprises after hours as well. There's some of the smaller caps out there, or smaller caps, not as big caps, have been looking at pretty decent earnings actually, right? But just to put a button on Amazon here, if you take the time and you just read the headlines of what's going on here, the headlines are huge, and they quite literally say stock is tumbling, results are terrible, all bad news. But when you look at it, they're growing still, double digits, by the way, both in AWS and overall. The numbers are still getting bigger. There's going to have to be some operational efficiencies they look at, but we're in a macroeconomic situation right now where things are just terrible and they're still doing okay. So I think this is one of those ones where you have to assess your level of risk as an investor and decide when it makes sense to consider if this is something you want for your portfolio, if this is something you want indirect exposure to in the indexes, and how you might want to play this. So again, I'm stressing this because I think it's an important call out for a second here. I absolutely do not want you to listen to this and run out and take action on it. But I'm looking at this and I'm just seeing, actually, we talked a lot about this the other day with things like Google, even Meta necessarily, the, excuse me, the amount of asymmetrical return that can exist in these big, huge companies with still double digit growth rates is absolutely wild. So I just want to jump in and do a really quick live stream. I'm not going to waste everyone's time and be on here for 2 hours talking about the same thing over and over again. The earnings were not bad. The drop in price was bad, but I think there's an opportunistic play here. For those who do this on a regular recurring basis, like my buddy that I mentioned, he saw this coming a mile away, played it to make massive amounts of money on the way down, and he's going to end up switching gears when he's ready to get back into a position to now take profit on the way back up. Man, I'm even looking at the price right now. It's still down about 14% after hours at $95. Yeah, I don't know. I mean, this is not a bad company. The market cap's down to 1.13 trillion as it stands right now. They have absolute market dominance across the board. Across many analysts, it's still a massive buy. We're looking at Prime memberships are driving value. We're looking at deliveries are driving value. It just sort of feels like a no-brainer to me, for sure. And yeah, Rizzy, I think actually like super well said. I want to call this out for anyone who catches this later but doesn't see the chat. Without a doubt, this is one of those things that you DCA into because there is almost nowhere for Amazon to go in the future here. They're going to continue to be an e-commerce powerhouse. They're a delivery last mile powerhouse. They're in all sorts of different businesses and are powerhouses in those. And then the biggest shining star, without a doubt, is the AWS piece. There is absolutely no doubt whatsoever in my mind, full stop here, that AWS is the absolute monster of cloud computing. It doesn't mean that there aren't other big monsters too, but there's not that many. For those who watch a lot of the Palantir stuff that we put out, we talk a lot about the fact that they don't have to be the only one as long as they're one of the top ones, right? That's where the asymmetrical returns come in. You could break Amazon and AWS up into two companies and still have two unbelievably successful companies. So for me, the way I approach this as like non-specific thinking is this is a DCA. I hold a little bit of Amazon, full disclosure, not a ton. I tend to get my tech exposure in like tech focused ETFs like QQQ, things like that. And then I play the swings in TQQQ. Don't take my advice on that. Just that's how I play it for sort of nearer term gains. Drew, expand on what you're saying here on the RSI, if you don't mind, if you're still there in the chat, because I think it's really interesting playing on the RSI. I think there's going to be potentials here for some pretty obvious bounces, possibly. I'm not saying definitely. But look at Meta, right? Meta saw an absolute demolishing. Got demolished the next day, no surprise, but it did bounce a little bit after all was said and done. So it's going to be interesting to see what else is happening there too. So I think this is just potentially one of those things where there is an opportunistic perspective to take. Yeah, Rizzy, exactly. So I'm going to be honest, I can't talk about that because of business relationships. So I'll just leave it there. But yeah, Drew, buying calls when the RSI gets to around 30. I think this is a place where technical understanding and fundamental analysis play really well together. To be able to look at the numbers and recognize a company that's still growing but facing macro challenges, but have asymmetrical plays in the option market tied to those technical reads, right? I'm just going to call it out for anyone who watches this later. Number one, if you don't follow Drew, you should be. But he's looking at RSI of 30 as a place to jump in, considering it will be oversold and the TA will be primed to go up. I mean, look, if you're in the software business, I think there's a no-brainer here. And then Deltsy, I just want to call it out too again. And hey, Cam, how you doing? I don't do financial advice. I look at companies. I don't look at stocks, right? So I want to understand how successful the company is going to be. I want to understand what it's going to do for them. I want to understand what the long-term vision is. But the valuation of the company and how it gets perceived to stock can get very disconnected. We're in a macro environment where disconnection is an expectation. As an investor and even as a trader, disconnected realities between stock and market cap pricing and companies' valuations are where we all make our money. So I think that's a great call out, Drew. I appreciate you sharing that in the chat. And I think the other big thing is too, so Delty, I just want to call this out. With all these earnings reports coming out, whether it's Apple or it's Meta or it's any of the FANGs or it's anyone else for that matter, whether it's Palantir or it's this or it's that, I think it's a great reason to take a step back and say to yourself, if I'm not sure where to DCA from a specific stock perspective, because I'm going to be the first to say, people are full of it. When you read the stuff online and they talk about like, oh, I bought 100 more shares of this and 1,000 shares of that and 50 shares of this. They're so full of crap. So you're telling me all these people somehow were just sitting on massive amounts of, I don't even have a good way of saying it. People are just, everyone and their mother suddenly has bags of cash they've been waiting for the perfect moment to deploy. Here's the reality. Most people are buying, on Robinhood, a couple bucks at a time to DCA. If that's the way you play, hey, good for you, man. I think that's great. I think it's an excellent thing. I will just call out as well that if I didn't know what stock to put my money into and I wasn't sure, but you want exposure to things like the technical companies, I think what you got to do is go and see if you can find some broad-based indexes. So maybe you play the NASDAQ directly, or maybe you look for some specific ETFs that really focus on the FANGs or on these high-tech growth companies. And that's a way to DCA into everything all at once. So you have exposure. And since most of them are down anyways, it's a good way to think about it to kind of get a bang for your buck, as well as getting some sort of diversification to protect yourself. And a lot of them will sometimes pay a dividend as well. So you can double down on that front too. So I just leave it at that. And I'm going to jump off in a minute, team, because I'm sure there's a million other people who are going to go into the wild details of every single piece of information here. I don't want to be that guy. I'm really looking at the company and the valuation. But Bruno, I have not watched FounderCon. For those who watch this on a regular basis, you realize that you'll know that I work full-time in the analytics world with machine learning, AI, and data science. So my days are typically pretty busy. And today was one of those days. I'm working with some amazing companies right now who are doing some amazing things. And the future for anyone who's in and around data, AI, and machine learning is really bright. It's hard to say who the winners are ever going to be. But the reality is everyone knows they have to get going in that front. And you're either going to be leveraging machine learning, data science, and AI, or you are not going to be in a good place. I think that's the realization a lot of companies have. I will check it out, and I appreciate that. Actually, if you guys have anything you could share in the actual comments from a link perspective so I can go and check that out, I'd appreciate it. And just a quick last one before I jump off. I'm trying to see who asked about it. Cam, what's DE? I don't recognize what that means. Oh, dear. Of course. I thought you were like referencing the state. I love John Deere. Full transparency too, team. I have no investment in John Deere. It's just I don't have room in my portfolio for anything else. John Deere is a great company. I was actually out in San Francisco, I don't know, a month or two ago, and I walked by their innovation center, and it just they're doing some cool stuff. I think that so many folks hear John Deere and they think naturally, I would expect them. They think about John Deere and what they hear is tractors. They think farming and agriculture, which is fine. That's totally fair. I think for all of us and probably a lot of people sitting in the chat, when I think about John Deere, I'm thinking about a cutting edge company leveraging geospatial analytics, leveraging machine learning. As you said, they're using Palantir. I think John Deere is an amazing software company, and they represent again, I'm not talking about the stock here. I'm talking about them as a company. They really represent what the modern manufacturer has to become, a data first, innovation first company that's doing really cool things. Um, Team, I'm going to jump off because I think I've talked enough about the topic of Amazon. I got one favor to ask. If you don't mind smashing the like button for me, I'm getting killed on the algorithm because I just don't go out there trying to get tons of new subs. I appreciate so much everyone who's already here. So if you could do that for me, I'd super appreciate it. It gets me a little bit extra attention on the algo. Um, but what I would just call out in terms of Cam, your point there on the satellites. I don't share the story all the time, but I'll share it 30 seconds. Walmart was one of the first companies to launch satellites into space, way before anyone even knew what they were or why they would do it. And that's one of the reasons they've become the powerhouse they are today. Instant data transformation, instant data transmission. They were so ahead of the curve. That's why they're so good today. With John Deere, when you think about how they can leverage satellites, it's actually brilliant, right? Where are vehicles? Automate that delivery, automate the agriculture perspective of it. This means true AI on IoT at the edge. This is really cutting edge stuff. Amit, thanks for jumping in. I'm just about to jump off, but I'll end on this as a point. When I think about this dip in Amazon, I think that people are not reading the numbers and they're just focusing on fear from the macro. This is a massively great company doing really good things with no actual competitor. I mean, yeah, sure, you can talk about Spotify from the SMB perspective. Maybe talk about Azure from the AWS perspective. But let's be honest, all said and done, this is a really good company in Amazon. And forget about the stock for a second, right? Like just take the stock off the table and ask yourself, who is going to come out of nowhere and beat Amazon at last mile delivery, e-commerce, pricing, scale, getting to space, getting cloud computing at scale for everyone of all types, whether it's SMBs and startups in their garage, whether it's the US government and military, or whether it's the biggest companies in the world who leverage them. So I'm going to leave it at that. Team, super appreciate everyone jumping on. I didn't expect anyone to jump on. So really appreciate everyone who's here. I appreciate everyone for smashing that like button. And I don't know, if you don't know where to put your money right now, I would urge everybody to just take a step back and realize that you don't have to DCA into a specific company. Take the time and go and look at a couple of indexes or a couple of ETFs that have broad exposure to mega caps in the tech realm. That's the best, easiest way to think about it. And so with that, team, I appreciate everybody so much. What an amazing group of people jumping on. With that, I'm going to go start digging into some of these details because I think there's a lot more in the paperwork across a lot of other releases. And Amit, I think you got to get a live stream going because there's a lot of questions on all these earnings. So I'll be looking forward to jumping on that and listening while you talk about it too. So team, see everybody later. Thanks so much. Have a good afternoon. And let's get rich in this recession, team. I mean, let's do this thing. I'll talk to you later. See you guys.